In this video, we're going to examine what's happening inside the crypto market, inside the stock market, and what you need to look at and what you need to look out for. We'll also go through the cheat sheet. In a couple of days, the US presidential elections and the congressional elections are coming up. And then literally 2 days after that, we have the FOMC meeting where they're going to decrease the federal funds rate with a 98% probability by 25 basis points. That's going to throw negative momentum onto the DXY, onto yields, and should increase gold, silver, and other commodities prices, and also the stock market and crypto. But we have one particular problem at the current time, and that is the VIX. By going into the cheat sheet and having a look at row 1, we can see that there was upward pressure on the VIX, and Bitcoin and the entire markets, for example commodities markets, as well as the stock market, they didn't like that very much. What about the US 10-year yield? It's been coming up. The 2-year has been coming up. Oil has been coming up. And we've seen a bit of a decrease in the DXY and dollar yen at the current time. But the VIX is the thing that we need to keep our eyes on. One of the good things that we've seen, the euro dollar is coming back into gravitational alignment with Bitcoin and crypto. That's a good thing. That's what we want to see. And we can see the DXY is inverting it. It can be a little bit difficult to see when it's looking like that, but if we invert the scale, it's pretty damn obvious. That's why we look at the euro dollar. Heading into row 2, we can see row 2 is coming down, but there's a bit of a sign of life here with junk bonds. This is a very good sign. This may mean that a short-term bottom is maybe on the cards, but we'll have to check it out. We can see that gold is just aligning with its digital gold counterpart, which is Bitcoin, and the euro dollar coming back into alignment. But we also see that it's not going that well. We can see that gold and silver have been quite negative, and gold and silver tend to reconfirm each other. The euro dollar and the Aussie dollar tend to reconfirm each other as well. One good piece of news is copper. This can give us an indication as to where China, the manufacturing hub of the entire world, is going. And it could have been responsible for a bit of a kick up in junk bonds as well. Typically, when we see junk bonds improving in price, that means that we're starting to see a degree of capitulation inside the markets and hammering out a bottom. But don't forget, the VIX is still very much alive. The best way to understand where the VIX is going is just to look at the futures of the S&P 500, NASDAQ, Russell, and Dow. And we can see the futures are a little bit negative and they're seeking to recover at the current time. There's been a bit of a sell-off, and that's actually pushed its way through to the crypto market. Crypto is very, very risk sensitive, so this is something to bear in mind. But when it comes to the Russell 2000, just like junk bonds and copper, it's showing a bit of a sign of life here. This is good. Row 3 is very important, looking at the major market indices, and we can see they've been coming down, and that's been throwing risk off all over the place, which explains why Bitcoin has been coming down and the entirety of crypto as well. But the Russell 2000 is showing that sign of life. Awesome. That was row 3, and into row 4, Apple computers. We can see Apple is starting to do a mild recovery here. Very good thing. What about Tesla? It's still a little bit weak. And what about Microsoft? It's just following that gravitational alignment inside the crypto space. Nvidia sought to break out on news that junk bonds was improving and oil was improving and also copper, but it ended up getting sold down. Election jitters are very, very real. Also, the FOMC meeting coming up. There's a lot of volatility inside the market at the current time. Looking inside row 5, the crypto market, we can see it's been coming down, confirming row 1 and row 2 and also row 3 and row 4. What do we see here with Bitcoin? It's been coming down. We would anticipate seeing a bit of a recovery. To be advised, if the VIX starts to decrease, we would want to see Bitcoin starting to rally. And that could well happen, but probably after the elections. Look at Ethereum, just coming down with Bitcoin and total crypto market cap. MicroStrategy, which sits on the fence between the crypto market and the stock market, has the best of both worlds. Actually, it's coming down as well. For row 6, we look a little bit deeper under the hood of the crypto market to see what's cooking. And what's cooking with Litecoin? It's selling off. What about Bitcoin Cash? Yep, it's coming down. Binance Coin is coming down and Ethereum Classic is coming down. So far we have widespread confluence between all the different rows of the cheat sheet. That is pointing to negative price momentum with a potential recovery. The most important thing that you can do with the cheat sheet, and now we're looking at row 7, is to look at it from a structural perspective. This is a directional perspective. Look at Doge. Doge has signs of a recovery or change of character and change of trend. That's pretty cool. What about XRP? One thing to always be aware of, it doesn't matter if something splits. If Bitcoin is coming down, it will be dragged down, whatever that chart is. There is a gravitational alignment always playing throughout the entire crypto market, which makes it a much easier market to trade and invest in, rather than the stock market or Forex or just about anything else. When people first start trading and investing in any market, they believe that all of this price action is completely random. If it comes down, it's going to zero. If it comes up, it's going to infinity. Actually, it doesn't work that way at all. If it comes up, it's reached an area of structural support. And if it comes down, it's reached areas of structural resistance. Structure is just a game changer. Actually, I'll just zoom in here with the indicator from the service to give you a view of this price action and why we're seeing this particular action right now. Let's zoom in. Zooming in to that price area, we can see around this 71,300 mark, there were many levels of structural resistance. So when we sold down, we found support originally just a little bit below the 7,200 level. There was stronger structural support at the 69,800 area. And when we find these negative CTKS gaps and positive CTKS gaps, price can move very, very quickly because there's literally nothing there. There are no structural levels there. So we can overshoot and overextend and whip back to structure. It's called structural gravitational pull. And when we look at price going forward, we always notice that these structural levels, they're very important because you can see here we've got a high, but this is a lower high. So we're getting lower highs, lower high again, and it's getting further and further away from this structural level of 69,800. That sets it up for a fall. And if you combine it with a negative CTKS gap, it's going to push itself down until it finds structure. These structural levels are incredibly important to keep your eye on. If it fails at structure and it can't get above, it's going to the levels below, which makes everything really quite easy to look at. And if you understand that what you're actually trading is volatility, it's the volatility that you're after. Because, for example, if Bitcoin's price was just a flat line, say it was 69,000, and that's all it ever was, would you put money into it? Of course not, because it's 69,000. It never increases and it doesn't decrease. Ugh, how boring. What you need is volatility, and this is on the 15-minute time chart. When you get volatility inside a price chart, that's how you make your money. Instead of being fearful of volatility when it goes red, get greedy. And when it gets green, don't get greedy, get scared. And that's how all the legends of the investing and trading markets work. They just invert retail thinking. Just zooming out a little bit, so you could see that this 69,800 area became structural resistance and we failed to get through it. We found a structural support level at around that 68,200 mark, and then we broke down through it. These areas of structure are worth an absolute fortune to you because you know if you get a negative CTKS gap, this structure is very, very valuable. It will rebound price. We see it time and time again, so just a thing to be aware of. A lot of people say, how do I manage a losing position? If you're doing it properly, you start with a losing position. Again, it's another inversion on retail thinking. But of course, you must know what you're doing. You must know where the structure is, and you must have a sound strategy. Your sound strategy must always be one of structure. No matter how you find that structure, you need to find it. You need to, for example, when you look at total crypto market cap, you know that total and Bitcoin move together. If Bitcoin is coming into its own structural support levels, it will rebound total, even if total doesn't have structural levels around there. This is all part of the intercorrelation and interconnection between various charts. And also, if you're inside the service and you had the indicator, you will know that above total crypto market cap, there's an absolute barrage of structural resistance. Therefore, that favored by seeing row 1 of the cheat sheet increasing in value, we knew that crypto and the stock market would be under pressure. We prepared. Okay, with that in mind, let's look at the indicator from the service and let's just indicate what is happening inside total crypto market cap. You can see this $2.209 trillion area of structural support became, unfortunately, it sold down and it's now being retested. The bulls are trying to get over that level, confirm it as support in order to move upwards, but the bears want to collapse this level downwards. So if that happens, where is the next structural level? It's pretty light. And if we look at this, if the bears gain a control because the VIX starts to spike up with the election fears and the Fed fears, this could actually get taken out. So you must be aware of your negative side exposure, but also how things can go from a positive stance. This is also an inversion of retail thinking. Retail just says, give me the one direction that it's going. Well, One Direction may be a pop band, a music band, but it sure as hell doesn't work inside any financial market because it doesn't go in one direction. Even though it's coming down, it still went up. And if you time things, especially around structure, you would have done really, really well. If you would like to help out your friends and family, you can just take a screenshot of this particular chart with all the structural levels in here. Right now, Bitcoin is 67,688. It's come down to a structural area of support and rebounded. We have a lot of structure down at the 66,045 level. If the bears get in control, they'll seek to push it down below 66,800 and challenge this 66,045 level. If the bulls get in control, they'll seek to push it above 68,200 to reclaim the 69,800 level. And also, please note this positive CTKS gap. Now, what does this mean? Negative CTKS gaps occur when price could fall because there's a gap down to the next structural levels. A positive CTKS gap means there's a gap up to resistance levels from support levels. If we manage to get above 68,200, it could blow the socks off, especially the bears, because it could move up very, very quickly. When you have areas of no resistance, either to the upside or to the downside, no support, you really want to pay attention to those areas. If you think these levels can help your friends and family, please share. Just grab a screenshot of this. The structural levels for BNB have been released inside the service. One of the things to realize, when price moves, it is not random. It is always structurally bound. How do we determine structure? Well, you can learn it yourself through level 1 and level 2 standard certification. Basically, learn it once and apply it for a lifetime. But if you're very busy or your time is very expensive, you can just join up the service and we mark up the charts for you in strict accordance with level 1 and level 2 standard certification. The reason that we look at BNB is a kind of a gateway. This is the world's largest crypto exchange. And because it's the largest, BNB is a very important token for us to pay attention to. It could be a little bit light for you to see, but there was a structural support level just a little bit north of the 544 area. And you can see how this just relates to what Bitcoin and total crypto market cap are doing. If BNB manages to get above this 54, well, say 55 or 550 level, and then just get through that 55.4 level, we are going to have positive momentum literally back to the 568. If the bears gain control, they'll seek to push it down through this very light resistance. I should say light support. But these negative retracements can be very, very profitable because down just a little bit north of the 528.40 mark is an area of structural support, and it's quite a strong one. When we look at the structural levels on Solana, we can see that just literally at that 170 level is a very, very important level of structural resistance. We also have a couple of levels of structure playing inside Solana's price chart. The way that we look at structure is always the same. Structure is rightwards looking. So if price comes down through a negative fresh air gap, we would expect it to get caught at structural levels, and that's exactly what happened with Solana. This makes it incredibly important for you to know where the structural levels are. For the bullish case and the bearish case, we have quite a degree of structure around that 156.20 mark. The bulls would seek to push the price up to 164 and eventually 166. If the bears get in control, they can only get in control by pushing the price below 156.20 and then taking out around that 154 level. If we see improvements in Bitcoin and total crypto market cap, Solana could move very, very quickly back to the 164 level. And remember, that improvement in junk bonds, that bit of a push up, the improvement in copper and also oil going up is actually really good. Because what typically happens when people see negative price action, they say, oh no, the markets are going to crater, the markets are going to sell off, it's worse than anything ever before. But that is a retail thinking level. Just always assume normalized price movements because price is always just moving between structural levels. The thing to understand, every single chart has a different structural fingerprint, so it means that it's always different. When we look at Doge from a structural perspective, and that's been released inside the service, we can see there is a lot of overhead structural resistance. Remember when Bitcoin came into structural resistance and it couldn't get above, it went below. You need to be aware that Doge is getting into all of this structure. Now, two things happen when this is the case. If structure is very strong and there's a lot of buying interest, that is what causes consolidation. If there is a lot of structural resistance and the buying attention tends to wane, you can get negative price momentum. Now, it always depends on where the structure is. If we start to lose this 153 level, we could literally go back to 143 because there's a negative CTKS gap and we could actually overshoot this. If you were looking at a price chart without the structural awareness, you would just look at something like this and say, I don't know where this thing is going. And you would just hope that it would continue to go upwards. But hoping is not a strategy, at least not a professional one. It is a retail strategy, and you don't want to use anything to do with retail strategies. Retail, 90% of retail loses money because 90% of retail is thinking emotionally and not scientifically. So please keep in mind this 143 level, it's really quite important. And if the 153 level gets taken out, please be aware of what that could mean. So if we see the VIX spiking up, we would expect Doge to be coming back to this 143 level. If we see other things, such as the VIX starting to come down and row 1 starting to come down and row 2 confirming that by going up, Doge could absolutely party. So in terms of retail thinking versus institutional grade thinking, institutions don't think up or down, they just think structure. If you go across to ctksmethod.org, you can download the cheat sheet absolutely free of charge. It is absolutely invaluable. If you're seeing row 1 get negative, that's a good thing. If it's going positive, that's a bad thing. If row 2 is going positive, that's a good thing. If it's going negative, that's a bad thing. What you always need to do in your quest to master price action is that you must understand which direction the markets are going. That is literally your first step. If you don't know what direction the markets are going, you're in trouble because you'll make a lot of assumptions and you'll find that you could just bleed out financially. You don't want to do that. Get the direction either up or down, and don't be too concerned which way it is. You can make money in both cases. Even if it's going flat, you can also make money. The CTKS method is not a trend following system. It's a structure following system. You know where the structure is already. You can set your buy and sell limits. And if you'd like more guidance into how to fill out the cheat sheet, you can get a video just here. And if you would like to see how you can make money in any market condition, there's some videos there for you. And they're all shared on YouTube. Something that could help you out a lot if you're panicking or getting angry. These are unfortunately the retail zones. Retail zones are fairly low levels of knowledge, and even if you tune into a lot of influencers on different social media platforms, if they're coming from a retail perspective, they'll just lock you in to panic and blame and anger and emotion. These are emotional zones. You want to get out of zone 1 and zone 2 into zone 3. The only way that you do that is to invest in your own knowledge. And investing in your own knowledge from a professional stance, not a retail stance, is really important. Having an understanding how to make three-way decisions. So that basically means the price could be here. You have to assume that it could go up or it could go down between structural levels, or it could just go flat. What are your strategies to handle upwards and downwards price momentum as well as consolidation? That alone will make you a fortune. You also have to think in terms of percentages and not dollars or euros or whatever your currency is. Having the right process is incredibly important, so just focus on your process. Also, Zone 4 is about mastering fear. Inside Zone 1 and Zone 2, people are always fear-based. They're competitive. They basically say, if I win, somebody else loses, or if I lose, somebody else wins. This is not the case. It never was. What happens inside financial markets? There are millions and millions of people and also millions and millions of algorithms and bots all over the place. It's not a question of win-lose. It's a question of win-win. If you want to sell, somebody is buying, you win because you think it's going to go down further. If it reverses, it's probably just a lesson that the market has taught you about structure. And also how to overcome panic. When people are panicked, any particular negative price momentum, they'll just exit the market 100%. And if the market just goes the other way, they'll get very angry. So inside Zone 1 and Zone 2, there's no profitability here. No profitability at all. You want to get away from this. Also, the scammers will also offer you certainty. There is no certainty except for the knowledge and skills that you apply. What you want is something different. Cross out certainty. Certainty is just rubbish. What you want is probability and you want rules. But most importantly, you want to think wealthy thoughts, and wealthy thinking is not about having a lot of money. It's about having integrity and decency and kindness and strength and boundaries and all sorts of positive excellence behaviors. A lot of people think that life is only about what you get. It is not. You can't take it with you when you're gone. Life is about who you become. And that's why inner and outer peace is very, very important. Inner and outer peace do not exist inside Zone 1 and Zone 2. Even inside Zone 3, it's not really there. There is less of conflict internally and externally, but inner and outer peace only exhibit themselves inside Zone 4. And don't forget, this is not emotional inner and outer peace for your personal life. This is emotional inner and outer peace for your investing and trading life. And of course, that will just flow on to everything. You'll find that as you progress, you'll find that everything you want is on the other side of positive excellence. Positive excellence is just a way that we can approach life, and especially trading and investing. Have a great day or night ahead, my friends, and it would be really good to talk about the difference between retail and institutional grade thinking, because it makes a huge difference. If you're doing retail thinking, you're probably going to get slaughtered financially, but that is a requirement. In order to get through it, you have to literally go through it. Those setbacks and failures are not failures. They are setting you up for success. So any life pullback is giving you strength for the next life rally. That's why it's vital to be dedicated and committed to either win or learn and never blame. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.